Okay, ladies, it is 9:08. So to be respectful with everyone's time, we're going to start the presentation. Okay. Let's see.
Sounds great.
Awesome. Well, thank you everyone for coming. First of all, good morning. I hope that you're all having a wonderful day. Um, my name is ChristianHernandez. I'm a loan consultant with Loan Depot, and welcome to our first 2021 event, Women and Finance, Create a Financial Independence Seminar. I would like to introduce our guest speaker, Sarah Eschenbrenner. Sarah began her career with New York Life in 2014 as an agent who have received high honors for 6 consecutive years and a three-time Life All-Star and Annuity Silver Elite member. She's a financial advisor with Eagle Strategies LLC, a New York Life company and founding member of Anchor Financial Solutions Group LLC. Okay, Sarah, the stage is yours.
All right. Thank you, Christian. First of all, thanks so much for having me. Really appreciate it. Nice to meet all of you. And it's unfortunate that last week, we had a little technical difficulties, but I think it's kind of cool because March is Women's History Month. So this is all about, us women. So I think it's actually really appropriate. So as I go along, as I go through, there's a little more information about me personally. I'm a single mom with 3 kids. I have 3 boys, and so they keep me plenty busy. And it was very important for me very early on to make sure that I had my financial intelligence straight. So I just always like to share that with other women because a lot of times we're powerful women, we're business women, but a lot of times we'll still defer to the man in our life to kind of take care of everything. And, no judgment if that's what you do, but I always think people need to be aware also of what it is that they do and what they have and what they need and, just really become independent to themselves with it. So I'm going to go through a presentation and you can, if you want to chat in the box, some of the questions, I might get to as time goes on. I try to keep it engaging. So like I say, if you have questions and you want to unmute yourself and ask, please definitely do. I like it to be more of a conversation. But then, if you prefer, you can wait until I'm done and then I'll open it up for questions because I think that's usually more helpful because if one person has questions, usually everybody has a question or the same question. So Christian, I'm going to go ahead and share my screen now. That's good. Slideshow. If I can figure out how to start from the beginning. Okay. So can everyone see that okay? Thumbs up. Good. All right. So welcome, of course, all the disclosures, all the fun stuff. So basically today, I just wanted to help you understand what your current needs are. And I'm sure a lot of us are familiar with what our own needs are, but really to bring those to light and then empower you to make those important financial decisions. And just informed financial decisions. That's the most important thing. And so as we go through, again, like I said, if you have any questions, just feel free to shout them out. But just to kind of get a look at where we are as women today, women are very in control of not only our personal worlds, but financially as well. Our businesses generate over $1.9 trillion in revenue. So I'm not going to read you this whole slide, but the second key point that I like to bring up is that 62% of women say they feel empowered when they are comfortable about their financial situation. So I think we would all agree that when we're comfortable with where we are financially, it sort of eases the burden on down the line. I know that, when things are going well and smooth and I'm feeling in control, then everything from my work life down to everything I'm doing with my kids suddenly becomes easier to manage and, just a much more pleasant situation for all of us. So that leaves about 38% of people who are not, really feeling empowered at all, or, maybe there's some other factors. So it's not to say that a financial situation is the only thing that can give you that feeling, but it is a large percentage. And so what we want to do is actually help protect our standard of living. So protection is the key, I think, innately in all of us. Obviously, if we have a family or even just ourselves, pets, anyone. What we want to do is protect our standard of living. And so what protects that? Well, obviously our business, our work ethic, how hard we're working, the money we're bringing in, but it can go all the way from, just like bare bones all the way up to, we're in a pretty good spot in our life, but what's going to keep that from suddenly going downhill? Well, a lot of things, right? Taxes. We all know taxes are kind of going up right now. They've been historically very low. So inflation also on the rise. Death can't help that. We're all going to die someday. Disability, something a lot of people don't plan for, especially independent business owners, when you're the only thing that's keeping you from, having that sort of fall go down the hill. If we become disabled and we can't work, our standard of living is going to suddenly become very, very different. And then, of course, retirement. And with retirement, that's the goal, of course. We all want to retire. We want to, do all the things maybe we've been waiting to do or we've been doing just in pieces along the way. But we want to make sure that everything we're doing today is kind of preparing us for those steps and keeping us from sliding back down. So, we all have a lot going on, right? We've got work and we've got, maybe kids or husbands or just, not so many social events these days, but a lot of Zooms and, just all the personal things that affect us throughout our life. But so it can become very difficult to say, no, I'm just going to stop. I'm going to take control and I'm going to just focus on these things because I need to take time for me too. That's important. Kind of like when you're flying and, they say, if the plane's going down, I don't know how many of you think this. I think the plane's going down, it's going down. We're not gonna have to worry about who gets their oxygen mask on first. But, they say, put the oxygen mask on yourself first, then start helping other people. So it's very similar when it comes to anything as far as your family or financial. You've got to start here, and then that's what's going to enable you to protect everything else around you. So we're going to look at financial goals, risk management, some investment strategies, retirement planning, and then estate planning. I'll just touch on that. That's really a whole different ballgame. But the first 3 or 4, obviously very important. So with financial goals, I don't know how many of you journal or you just have a vision board, or maybe you write a monthly goal, something like that. So, I always think it's very important to set those goals and to be specific. So obviously, we can say, oh, I want to make more money. Oh, I want to pay off my debt. Oh, I want to, vary all these general terms. The more specific you can be, you can say, I'm going to save X amount. I'm going to save $1,000 this month. I am going to pay down my credit card by $400. You put a very specific number on it. And you keep it realistic with the deadline, so you don't say by tomorrow when you don't have anything going on today. But you want to not only make it realistic, but also kind of push yourself too, and just say, what am I going to really get serious about? Because until you get serious about it, it's probably not going to happen. Just like I don't know if all of you are realtors, or Christian, she's obviously in that line of work with the mortgage and the loans, and it's a similar industry, somewhat to mine, where you're kind of out there, you're finding clients, you're working with clients, you're developing relationships, and you don't always have control over what someone's answer is going to be, if they're going to take the house, if they're going to take the loan, if they're going to move forward. But all you can do is what you can control. So as long as you're working on your controllables and you're setting those goals, saying I'm going to have this many meetings, or I'm going to show this many homes, or whatever it is according to your business. You just want to make sure you make it very, very specific. The second thing is establishing that emergency fund. So this is very important. Obviously we're in the age of credit cards, but we're also in the age of credit cards with 29% interest rates on them. So you got to be a little bit careful about just saying, oh, if anything happens, I can just charge it. You're really setting yourself up to start getting behind. And so it used to be 6 months to even a year as far as having that emergency fund. Now it's kind of backed off to 3 to 6 months, just because you want that much at least liquid. If obviously if things get very dire and you need the credit cards, okay, but that doesn't want to be your first line of defense. And then that going into the credit, controlling the cards, looking at the history, look at those interest rates, see if you can consolidate. You've got a couple of different credit cards, which one has the highest interest rate, get that one paid off first. So just even very little, subtle changes in what you're doing every day can really help you make those financial goals much more quickly and much more realistically. So one of the things I always talk to my clients about whenever I'm sitting down, if we're doing a financial plan or even just trying to get, just an overview of this, is net worth. So net worth and cash flow, sometimes people think it's the same thing. It's really not. So net worth is including all of your assets. So if you own a home, if you own your car outright, I mean, obviously it's retirement accounts, 401ks, checking, savings, it's all of your assets, everything that has a dollar value on it. And then the net worth comes when you subtract the liabilities. So obviously whatever is owed on those assets, and that becomes your net worth. So someone could have, you say, oh, what's the net worth of Tiger Woods, or, whatever it is, or who, maybe not Tiger Woods, but someone could have a lot of net worth, but their cash flow could be very, very low. So you, again, have to be a little bit realistic when you're planning your finances, because if most of your net worth is tied up in properties or in non-liquid investments, then your cash flow, you have to pay attention to that, because you have to make sure that whatever your income is on a monthly basis and your expenses are getting covered, you want to make sure that that is going to provide you the means to live comfortably, and then also do all the things that you decide you want to do as far as savings, as far as setting money aside. And if you can focus on the cash flow first and really, depending on your line of work, I mean, if you're in a commission-based industry, then we all know, we can make as much as we can make. I mean, you just work a little harder, make a little bit more, right? That's something controllable. But if you're in a salaried position, maybe the income is not controllable. What is controllable always is our expenses. So again, going back to the goals, the goal might just be, well, I generally eat out 5 nights a week, or maybe I used to, or even just delivery 5 nights a week. I'm going to cut that down to 3. Can make a significant impact on just the amount of that you're saving. So it's just these little tiny habits that you can start to change that sort of then become part of just your everyday living. And you'll see here, it says page 2 in your workbook. So normally, like if we were in person, I had a little workbook that would go along with this, but you can take the notes, or if you're interested, I can always send you the workbook after the fact. So there's 2 types of people in the world, right? So do I spend my money first and then go, okay, now I can save this much? Or am I saying, no, I'm saving 20% every single week. And then after I pay my bills and after I've done all the things I want to do, now I've got my fun money. So obviously the goal is to be able to save first. And what I tell people is, depending on where you're starting, if you're in the beginning of a career or, in the middle, or it's really chugging along, if you get used to this mentality first, even if it's just a very small amount of every single week, that's going to help you, because you're going to get into that habit. You're going to be used to, okay, I know I save 10, 20%. So I'm going to continue doing that no matter if I'm making $50,000 or $500,000. Obviously then the amount that you're saving is going to increase, and that's just going to help you with all those other things we were talking about, with the retirement, with the emergency savings fund. But you have to get into the mentality first, because if you don't have that mentality, it's going to be very hard to say, well, once I make more, I'm going to save. No, you're not. I mean, I've seen it. I've had clients where they were in college and they had no money and they weren't saving, and it was kind of like, we got to start saving. We got to start saving. Oh, once I make more. No joke, got out of college, both got great jobs, making, a couple $100,000, 24 years old. Still, I don't know where the money went. There's just no money left to save, because you're not in that mentality. So it's very important to start that early on. And if you haven't started it yet, it's not too late. You can start now, little bits. I'm reading a book right now called Atomic Habits by James Clear. I don't know if you guys have heard of him. He's also got a daily email that comes out and a podcast, and he just talks about making these tiny little incremental changes. So little changes can make a very big difference at the end. Okay, so then obviously we're going needs versus wants. This is getting very basic. We know what our needs are. We know what our wants are. So I don't have to go into that too much. So this is something I think you could jot down for yourself. Where are you now? What are your current savings? And really, this puts it in a dollar amount. This can say, well, what do you have in the bank account? But really what I like to say when it says realistic goal, work on a percentage, because again, as you're making more, which is obviously the goal as we go along in our careers, $5,000 today to save might be like, wow, I'm doing great. now my income went up 5 times and I'm still only saving $5,000. It's not that great. Now it's, I'm probably just spending a lot more than I need to be. And, I don't want to be the fun police. You don't want to just stop living and stop having, fun and having your joys. You do also want to say, well, do I want to work forever? I mean, because at some point you got to set up a little bit aside there. So set those goals. So risk management is very important, and risk management is pretty much a fancy term for insurance. So I won't go into, a whole lot of in detail explanation about each of these. Emergency fund, we talked about. Life insurance, of course. My broker dealer is the #1 mutual company in America, and life insurance, I have a lot of it just because I've got 3 kids, and if something happened to me, I want them taken care of. But this is something that people really should focus on, just because it is that instant tax-free death benefit. I've unfortunately had to do too many death claims, and it's never expected. Even when someone's older, no one's ever really prepared for it. And I've had clients who, even though they have hundreds of thousands of dollars set aside, they've got pension money coming in because they're older and they're from the age of pensions. What relieves them the most, they say, well, when's the life insurance coming? When is that? And because people are just, that's just what they think about when they think about, someone dying. Where's that tax-free benefit going to come from? That's going to erase a lot of these expenses and a lot of these bills, and help me just have some peace when I'm going through such an emotional time. So I always like to stress the importance of that. Health, disability, like I said, I can go into all of these in greater detail, but basically, this is one just sort of little rule of thumb: 7 times your gross income. So you all know what you make, what your needs are. Obviously, if it's just you and you're the only one you have to worry about, that might be a different thing than if you have little ones you're worrying about, a spouse that's also dependent on your income. Because I've had people say, oh, I could stretch $100,000, and I say, yeah, okay, we could probably all stretch $100,000, but how much does your husband make? $100,000 a year. Okay, so you only want his income replaced for 1 year. Do you count on his income? Yeah. Does he count on your income? Well, yeah. So those are the kinds of things you have to think about. It's not just paying off bills or saying, well, the food bill will be less because there's one less person eating. That's not that's not really enough to cover it. So it's usually making sure that that income replacement is there as well. So we can go through needs analysis. These are just quick numbers. Like I say, I'm just going to kind of fly through these. Health insurance. Hopefully you have some sort of that. Disability insurance. I touched on that. When you do work for yourself, if you become disabled, either short-term or long-term, who is replacing that income that you're earning? Because if you're working for yourself, you can't replace your own income. And if you're working for an employer, sometimes they provide this, sometimes they don't. But especially when we're self-employed, if you're an entrepreneur, just working for yourself, this is very important to make sure you have, just to protect for those gaps where, maybe it's not going to be a permanent thing. But if you miss 5-6 months of your income, you're probably missing it, your family's missing it, and it's a very easy way to mitigate that risk by getting a little bit of disability insurance. Long-term care down the road, I talk to people about this every day. It becomes, Forbes magazine, all of the, they've been saying, little piece of the pie needs to be something in long-term care, just because it says 1 in 4 of today's 20-year-olds will become disabled before reaching age 67. So that was kind of an alarming statistic to me, because that seems very young to become disabled. But what they do say is that about over 2 out of 3 people are going to need long-term care in some form or fashion. So that's just an area that I work with people on as well. And then auto and home, obviously, you can find a good P&C person, or I can refer you to one, and make sure you have that squared away. Now the fun stuff. Everyone always wants to talk about money. That's much more fun than talking about death or disability. So how do we make money? So some strategies, this is very basic. The higher risk you take, the higher potential return you have. The people that were invested very heavily in equities in the stock market last March, when everything sort of went, took a big dive, they saw a big loss. But, managing emotions is really a lot of what I do, because it's saying, hold tight. Historically, since the inception of the stock market, it's always come back. So hang on tight. And those people had excellent returns by the end of the last year. I mean, people were amazed. Now, if they took a lower risk, maybe a lower potential return, also lower chance of loss. So some of this depends on you, your risk tolerance, just kind of your emotional attachment to the market and being able to resist looking at it every day. Some of it, of course, is depending on the time horizon you have. I mean, if you are looking to retire in 5 years, probably not the time to be super high risk because you may not have the time to make up if there really is a significant loss in the market. But if you're in your 20s, 30s, even 40s, I mean, we've got a while until we're going to be using those funds. And so, yeah, take advantage of it because, like I say, 2008, last year, I mean, these dips we have in the market, it always comes back stronger than ever. So I'm a big believer in the market. I love talking to people about the market, about, what their goals are, what their strategy can be and what it can do for them. And, a lot of times as I work with clients, they start out, they feel pretty conservative. The more I'm educating them, the more they understand, then the more comfortable they usually feel. And, and we can make adjustments. So I'm always in communication with my clients talking about that because it's all changing all the time. So like I said, investment objectives, time horizon, do I need access? Anything that's in an individual retirement account, whether it's a 401k, a simple, a SEP, even a Roth IRA that you start on your own. If you need access to that, well, the IRS is going to give you a little, slap on the hand. 59 and a half is the age they say you can start taking that money out without any penalties. So if it's something where you say, okay, I want to set some aside and I definitely do not want to touch it, that's going to be for my retirement. I'm not going near it. But then you also have your eye on, maybe you like flipping homes. Maybe you like, whatever it is that you say, I want some ready access to some cash, but I still don't want it just sitting in the bank earning 0. nothing. There's ways to invest where the money is 100% liquid. And so it can be growing, but you say, hey, Sarah, I just got this big offer on this home. I want to buy it. Boom, take the money out, go take it to there. And it can be a little bit more fluid. And then the other one is, will my standard of living be affected if I lose some of the money? So this really comes into play when, certain stocks, they're all over the news. I don't know if you guys heard about the GameStop thing, but everyone gets very excited about like the quick buck, and they say, oh, Sarah, what do you think? Should, and I say, well, if you've got $10,000 that you really don't care about, then sure, you can play in the market. But I am not a day trader. I have no interest in that. I'm really looking more at long-term goals for people. So, and most people, we work hard for our money, right? I mean, most people don't just say, yeah, I got 10 grand out, or like, I'm just going to blow it. But, and if you do, you probably have as good a chance at Vegas as you do, gambling on the stock market sometimes. But I don't discourage it, but I don't personally handle it. So just to say, it's an expensive, risky way to invest. It can pay off big dividends, or, you can lose big. So it's just, again, a lot of what I do is just education and letting my clients know this is how it is. This is what it is. This might be what I recommend, but at the end of the day, it's going to be the client's decision of what they want to do. And then retirement planning. So that's the ultimate goal, right? The big mecca, I'm going to retire. So how much will you need? So this is very different for everybody. And it's going to depend on what do you want in your retirement. And this is, a lot of, it's a conversation, right? So it's a conversation you have with your family, with your spouse, with your kids. I mean, it's you saying, well, am I a traveler? Do I see myself just jet setting around the world when I retire? Or, I just want to lay low, read a book, maybe, take a quick trip to see the grandkids here and there, or to see friends, but I'm really kind of a homebody. So those two costs of retirement are going to be very different. So there isn't really a set approach to how much you specifically will need, but you can be disciplined about it and say, I know I'm going to want to do this, and we can budget for it, and we can calculate, and we can project out, okay, if we're saving this much every year and this is how much you're making, you'll have this much by retirement. And then really what retirement planning is more than anything is income strategizing. So the same two people can start with $1 million in retirement, but if this person over here has no plan and is just sort of, I'm just going to grab it as I need it, well, that money could run out pretty quickly because depending on what the rate of return is, if you have those dollars invested, or if your withdrawal rate is too high, you can quickly run out of money if there's a big down year in the market, especially early on in your retirement. But if you say, no, in my income strategy, I'm going to have this much coming to me every month, like a guaranteed payment. I'm going to have this much over here invested for growth. I'm going to have this much over here. So it's really more of a diversified approach. And a lot of it is looking at tax strategies, just making sure that if you've got 100 grand you want to spend this year and you pull it out of something, are you going to pay taxes on all of that? Because if you are, that 100 can quickly become 75, 70, 65. Who knows what tax rates will be by the time we retire? So it's looking to say, how can we tax diversify? What are the after-tax vehicles like Roth IRAs? Roth IRAs, you pay the taxes now, which people say, oh, I wanted that deduction on my taxes, but taxes are very low and we're still working. So why not take it now? And then later on, all of that gain, all of the growth, everything you've invested, everything's going to come out tax-free. And that can be a huge, huge bonus to your retirement plan, because your income is going to be much higher, because not only will you have already paid the taxes on it, but it's also going to put you in a lower overall tax bracket. So whatever money you're drawing out that is taxable will be taxed less. So I'm just giving a very quick kind of overview, but tax strategies, income strategies, those are all the things that are involved in retirement planning. It's the pre-retirement planning where we're looking at the accumulation and how are we accumulating, what steps are we putting in place so that in retirement, we do have those different buckets to draw from. Everything isn't coming out of a 100% taxable bucket. We always want to make sure we've got the tax-free bucket, we've got a tax-deferred bucket, but tax-deferred just means tax later. So those are all very important. I'm not a CPA. I don't want to be a CPA. I don't pretend to be one, but I work alongside them very closely just to say, okay, we need to balance. Yes, I know that they need a deduction this year because their business made X and they're just getting killed on taxes, but we also need to make sure that some of it is going to the tax-free side, which means they are paying taxes on it now. So it's just kind of finding that balance, and it's going to be different for everyone. One, just real quick, and Christian, if I'm going on and on, you just stop me. But but one very popular concept right now is Roth IRA conversions. And what that is if you have a lot of money sitting in traditional IRAs, whether it was from an old 401k with an employer or just an old IRA that you had started, is converting those and paying the taxes now. Kind of taking a look at, okay, where's my taxes? Where's my tax bracket? As long as it isn't putting you into a whole nother tax bracket, actually recognizing that IRA as income this year or whatever portion you can and converting it to the Roth. So at least from now going forward, it's all going to be tax free. And like I said, we're in a very historically low tax environment, and bond prices are very poor right now because of the interest rates. Interest rates are low, then the prices are high, the yield is low. So this is becoming a more popular way to invest right now. That's just a little quick thing. So when it comes to retirement income, Social Security, a lot of people think it's not going to be there. I think it's going to be there. What they're doing is they're just slowly increasing the full retirement age. I mean, every time they stretch it out another 2 months, even, that's millions and millions of dollars that are being saved for those 2 months. So it'll stretch. It may not be exactly how we think it's going to be, but I think it'll be there because whatever president decided to wipe out Social Security, I think is gonna have a really tough time. So I don't. That's right up there with them making life insurance, death benefits taxable. Like, you're gonna tell widows and orphans that you're gonna tax the benefit that their loved ones left them? No. So those are two things that I don't think will probably ever happen. We've got employer-sponsored plans, like I mentioned, and those are those traditional IRA plans, but the employer hopefully matches for you. If you are, if you do work for somebody or you're someplace where you have an employer-sponsored plan available and they offer a match, always take the free money. Always invest whatever you need to, as much as you can, to at least get the match, because you just don't want to leave that free money on the table. And then personal savings. So if you do your own IRA, maybe a Roth IRA, if you have your own annuities, stocks, mutual funds, those are more the liquid accounts. And then savings, CDs. Again, CDs have been very popular. I mean, I heard some statistic about the trillions of dollars that are sitting in CDs because a lot of older people, that's what they were used to doing, right? Oh, I got an 8%, CD. well, you don't see those anymore. So that, just kind of encouraging the use of other vehicles where you're actually going to at least at the very minimum keep up with inflation. So when you fund your retirement, I mean, it used to be in the good old days, everyone had a pension and everyone had this and that. Now it's really more on us, so personal savings you can see is the biggest portion from all those things I talked about. Oops. Okay, well, I don't know how to go. Okay. Social Security is going to be a portion, and then those employer-sponsored plans. But even with those employer-sponsored plans, it depends on you investing as well. So really, when you look at it, 75% of this is on us to take care of. So I won't go into that. For your pensions, personal assets. So again, how will I be affected by taxes? That last question on there. It's very important. You've got to think about it because, like I say, I mean, we've all done our taxes, and then you go, oh man, I got to give this over to Uncle Sam. But imagine if that's a year you're not even working anymore, and now that was going to be your retirement income that you were going to use to go travel the world. That's you can put a little crimp in your retirement plan. So we just always want to make sure we're being aware of those. And then estate planning. The only thing I'll really mention about estate planning is that I think it's very important that if you have anyone that you love that's going to have to deal with any of your things after you would pass away, everyone should have a will and probably a trust. It used to be if you don't have millions of dollars, you don't need a trust. But they say now if you have $100,000 or more of net worth of those investments, you should have a trust. So I mean, you can do these very simply online. You can get a lawyer, you can get a paralegal, but I do always feel, and especially if you do have minor children, absolutely important, because you might think, oh, well, it'll be fine because, my kids will just get everything. But if they're not of age and there isn't something specific in place, a lot of that can be held for that until someone like the state of Arizona decides that it's okay for them to have that money. And I don't think you want the state of Arizona. I know I don't want them to be in charge of when my kids get some money or get whatever it is they need to have. So that's very important. And I'm sure we all know attorneys. I mean, I know some attorneys, it's nothing that I deal with personally, but it is very important just to make sure you have that. So of course, this is, just to kind of wrap it up, I don't have a crystal ball. If I did, it would be fantastic. But what would I do if my crystal ball told me I was going to live a long time? Well, I might I might put something in place where I know I'm never going to outlive my money, because that and healthcare are the two #1 concerns of people over 65 is running out of money. If you knew you were going to die next week, you'd probably have a lot of life insurance, right? You'd make sure you had a lot of that in place, because, leaving your kids the retirement money now suddenly is going to get cut short. So you want to make sure you have that. And if my crystal ball told me that, this investment was going to be, my golden goose egg or whatever that fable is, I'd probably put a lot of money into it. But since we don't have that crystal ball, then we just need to make sure that the things that we do have in place are going to be appropriate for us personally, are going to make sense regardless of our situation, whether we are single, whether we're married now but end up being divorced, whether our loved one passes away and now suddenly everything is left on us. So we just want to really make sure that we can be in control of whatever situation that comes up. So kind of that peace of mind, what do they say about those MasterCard commercials, right? How much for this? How much for this? The cost of peace of mind, priceless. And it really is, because, stress is a big factor and money is a big stress. So always want to make sure that whatever we can do, whatever systems we can put in place to help manage that, that we're managing them properly and realistically, but also something that's going to fit with our belief system, our families, and all of that. So again, no perfect place to put money, just making sure we're doing the things that make sense for us. So now these questions to ask yourself: what do you like about where your money is? Just so looking strictly at the financial side, what do you like about where your money is? I mean, is it liquid? Is it doing well? Is it earning lots of money? Is the return good? Is it guaranteed? What are the things that are important to you? And then what would you change about it if you could? And if you knew 10 years ago now, or 10 years ago what you know today, what would you have done? And that could be as simple as, I would have bought more real estate, or I would have bought less real estate, or I would have invested differently. I would have started that Roth IRA that my mom told me to do, and I said, I got plenty of time, or whatever it was. So just some questions to ask yourself. Knowledge is power. I'm a firm believer in this. I like to just share educational type things, and that's basically what I do when I work with my clients, is just make sure that whatever is important to them becomes important to me, and I can make sure to just answer questions and make sure I give them the solutions that are necessary to achieve whatever their goals are. So that is the presentation. So this time,
Awesome. Thank you, Sarah.
open it. Yeah. Open up the questions or however you do it.
Let me see. Feel free to unmute yourself in case that you have any questions for Sarah.
I don't think so.
Don't be shy.
Don't be shy. One of the things where I thought that, having Sarah or asking Sarah, I had, I met her, I talked to her, I was very impressed by the information and the knowledge that she shared with me. But I thought that it was really important for us to, gain some of that knowledge, especially in finances, right? As you have seen, the interest rates have been rising lately, and we have had some market movements that we haven't seen probably in a long time. And just so you know, I always like to keep everything short and simple, and that's the way that I like to explain it to my clients, to my agents. As you know, the massive stimulus that the government is thinking about putting out, to help the families through this pandemic, has been affecting and in some way to show fear of inflation. And as you know, inflation affects interest rates. And that's the reason why we're seeing movements. If that starts happening, of course, our interest rates are gonna go up. And if that happens a lot, less families are gonna be able to afford homes right now because the prices of homes are also increasing. I believe it was about 11 to 12%, the average right here in Arizona. So, we want to see it as a way for us in our families. How is that going to affect us? Our main goal is to help as many families as we can, right? But when we have, inflation, interest rates, savings, there are so many things that we need to talk about, not only for ourselves, but also so we can communicate to other families and we can help them with their finances. I really thank you, Sarah, for the information that you share with us. I feel, I've been in the financial system since 2006, and I remember my days back in the day working at the bank, where I will see families coming in, and it was very hard to, notice that they had no savings and they had a hardship and they wanted to apply for credit, but like that takes time, right? Like the bank has to approve it. There's certain things that they have to go through, and they don't have that. Even now in my business in mortgages, I am able to see how a lot of people, that are looking into buying homes that have no savings. I always like to ask, and how do you feel with the monthly payment they have? They still have to pay for their home, although it's not theirs, right? They're paying rent. But I always like to talk to them about an investment, like how buying a home can be an investment for them. And as you know, if the value of the property is increasing at 11 to 12%, yet inflation right now is about 3%, the rate annually. I mean, they're making money. So I always try to talk to them in a way that they can understand how they're saving for their future. And in some way, if we're not able to help as many families, acquire their homes, we can also be impacted by them. And I feel that financial education is one of the keys that we need to at least put attention on. And even if we don't take action right now, at least so we have that knowledge, and then one day we can call Sarah and say, okay, Sarah, I'm ready, and let's prepare for this and let's do this. What questions do you have? Do you have any questions for Sarah?
So Adriana had put in the chat box about how to, if like for a consultation with me or anything. So I did just want to let you know if you guys are interested. I do Zoom, I do in person. There's no fee for the initial consultation or anything. It's really just to kind of get to know each other and see if I can be of help, or if I would be of good value to you and to whatever situation or financial goal you're trying to do. So
Of course. Ursa says 40% of Americans cannot afford 400 emergency expense. That's huge. It is.
It's
Yep.
huge. Your emergency fund is the difference between life and death. I mean, so to speak. Yeah. So yeah, it's a big, very. I'm a very big advocate on an emergency fund. Even if it is just $1,000. Of course, down the line you want to grow that, but I think $1,000 is a good starting point.
You're right,
Yes.
and anything is a good starting point, really. It is just so important, and it's good that you recognize that, and that's just the whole thing, is getting people to make, like I say, those really incremental changes, and just saying, where could I find a little bit of loose change? And a lot of times that's my very first, people say, oh, I want to do this. Okay, the first thing we're going to do is a budget. Have you ever done a budget? And years ago, I taught a weight loss class, and in college or something, and I made all of my participants keep a food diary, because people say, oh, I don't spend very much. No, I don't buy anything. I never buy anything. Same with eat. Oh, I never eat anything. Okay, let's just write it down for a little while. So I tell people to do that with their spending. I said, if you go to QT and you get something to drink and a bag of chips, you write it down. Like every little thing, you write it down. And people would come back a month later and go, oh my goodness, I just blow money all the time, and I don't even think about it, because it's just a couple bucks here, a couple bucks there. Oh, I'll go buy that blouse, and before you know it, there's $1,000 that you could have done something different with, and maybe you still would have spent some of it, but you could have saved some of it. And I always tell people, like, think of it in thirds. Like a third of it should go to some sort of emergency savings, a third of it towards what do you need right now, like what are your expenses and your absolute things you have to do, food, things like that, and then a third for fun. Still have your fun, but you got to have that 1/3 like at the beginning for that emergency savings. Otherwise, that just gets narrower and narrower.
Very good. Mm-hmm.
Awesome.
Mm-hmm.
Hi, Doreen.
Hi.
Are you inside the car?
Sorry about that. Yeah, I had to get in my car and leave. So I was at a home inspection and I couldn't just sit in the random home.
You're so sweet. Thank you for joining us. Hi,
So I've
Cassandra.
been
How are
listening the
you?
whole way.
So I have a quick question. So is everybody here realtors? Are everybody realtors? Yeah. Okay.
I am.
No,
Okay.
I'm in the insurance business.
Oh, you are? Okay.
Yeah.
Cool. So then you understand it, right? All the emergency.
Property and casualty. Well, yeah, part of the reason why I put that 40% of Americans can't afford a $400, emergency expense is the common deductible is $500. So, if you have full coverage on your vehicle, and you have $500 deductible, a lot of folks have a hard time coming up with that money. So, kind of goes hand in hand, doesn't it?
Yeah, definitely.
Yay.
Well, for the realtors, I was just going to say, or if you're in a business where, you don't have that steady income, maybe it's like, this month I didn't really close any deals. Next month I'm closing 5. And so your income can be like this. Sometimes people just think like, well, I can't really do an investment. I can't really do savings because I just never know what I'm going to have. But there are tailored investments for exactly that situation. And I've talked to other like specific realtor companies about them and stuff. So if you're interested in those, there is a way to do it. And then Ursa, we should talk because I don't do PNC.
Okay, yeah, great. Wonderful.
That's
I'll get your contact
awesome.
information.
Do you have any more questions?
I don't think so. I think this is all wonderful, very useful information. Thank you for inviting and putting this together, Christian. Superstar.
You're welcome. Thank you,
she's
Sarah,
amazing.
Yes, thank you, Sarah. I mean, again, I met her. I had the opportunity to speak with her. I was very impressed, and I was like, everybody needs to know this, and it is true. Like everybody needs to have the knowledge, finances, and how insurance can help them. And sometimes people see it as an expense, and it is not. So it is sometimes it's a way that like the way that the community or the education that we had, and that they don't see it as a priority, but things can happen at any moment. And I believe that this is why we need to have that information available. And so I really appreciate it, Sarah, for allowing us to see your presentation. Thank you, Ursa, Lynette, Joanna, I saw, Doreen, Cassandra, Adriana, let me see who else is there. So thank you all of you ladies, and for the ones that were not able to join today, again, due to some technical issues, we were unable to do the event last week, but we got it fixed, so here it is. And I have a quote, it is something that I really like to do in the group, and I saw this quote, and I think that it comes hand to hand to what Sarah mentioned, and it says, I am a creator of life, not a manager of circumstances. So, I mean, if it is in our hands and we can, take action and manage and, do something about it now before it comes to us, and then we have to be juggling, everything that we got going in life, why not, right? So I don't know who's the author, but I thought that it was really nice.
Thank you.
Awesome.
Very good one.
Awesome. Okay. Sarah mentioned a book. It's called Atomic Habits, and I have it on my Audible. I haven't started it yet, but I have it available where I can share it with you. And if you don't have an Audible account, or if you already have one, if you just use another email, you can get it for free. So I will put that in the group as well, so everybody can have access to it.
Yeah, and if you go to JamesClear.com, he's got other resources there too, and like you can get that like a weekly email, and it's just, I mean, he's just really, really good. Like you said, just about like just those little tiny tweaks and little tiny changes, and atomic is like the smallest particle in the universe, and so it's just those atomic habits, because people think they got to do everything all at once, but right in the beginning, he talks about one thing where if you just are 1% better every day, then I mean, just specifically, just like by math, statistically, 37% better for 1 year. But if you're 1% worse every day, then you're like 99% worse for the year. So it's just, every day just saying, how can I be just like a teeny tiny bit better? So it's really good.
Yeah. Awesome. Shall we wrap it up?
Yeah. Well, thanks everybody. I appreciate you taking the time to listen in. If you have any questions, or I think my contact info was on that flyer, right, Christian? And so feel free to reach out to me. We can chat, and love to talk to you. Thanks.
Thank you, everyone.
Thank you.
Bye. Thank you.
Bye. Thank you.
Thank you. See you next time. God bless you. Bye-bye.